Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands, May 26th, 2017, and this is the Daily Report for Gold and Silver, our weekend review, and what an excellent finish to the week with a major upside surge in gold pricing, resulting in over a $10 move. Gold, and we are looking at the most active June contract of futures gold, closed up at $12.67. That is a net change of a positive $10.60, trading to a low today of $12.55.10 and a high of $12.69.30. So as you can see, we're under $2 off of the high. And if you recall from yesterday's show, we talked about the flag formation or compression triangle, that it was our belief that we would witness a breakout and a strong breakout to the upside. That was just yesterday. We definitely saw that today. Silver also faring very well in terms of the net change on the day. Gold futures closed up a little bit over 0.8%. The same with silver, up over 0.8%. A roughly 15-cent gain, closing at $17.34. Of course, we have long positions in gold as well as silver. And if you recall from Monday's show, we liquidated our most current June position in gold and pulled profits and then entered the August month. We'll certainly want to cover that along with the patterns that we have been identifying, the Three River Morning Star, as well as the Golden Cross, which really came into play on Monday of this week. But for the better part of the week, absolutely up until today, we had witnessed a series of lower highs and higher lows, and we saw compression in range. First, I want to start today's weekend review with an update of our current active positions. First to gold. If you recall, on Monday of this week, we rolled over our active June contract long gold into an August contract to buy us some more time. We got out of our June contract at $12.60 after entering a long position at $12.25 for a profit of $35 per ounce or $3,500 per contract. That's about a 40% return on that trade. Simultaneously, we recommended initiating a long position in the August contract month. August had a premium of approximately 3.5 cents. We entered that trade, which is our current trade, at $12.64. We are currently long gold at $12.64. This, of course, bases the August contract, and currently we have a close today of $12.70.10. So we've got a little bit of profits on our current trade and pulled a very respectable profit from our trade that we pulled out on Monday. Now to the board. We talked about the fact on Monday on our daily charts that we finally got the Golden Cross to cross. Now, what was interesting throughout the week was once we saw the Golden Cross form, rather than us seeing higher pricing, what we got was a market consolidating, meaning we got a series of lower highs and we got a series of higher lows. We had a market scenario in which my belief was that once we hit the apex of this triangle, we would get a release of energy, and that release of energy would be signaled by a sharp break to the upside or downside in gold pricing. And traders, next, I do want to look at our weekly chart. If you recall from last weekend's review, we identified a 3-candle pattern simply called a Three River Morning Star. We also spoke about the fact that for this particular pattern to really have strong credentials behind it, we need to have a confirming candle. So the combination of a Three River Morning Star and the Golden Cross together indicate the potential for more strong upside pricing in gold. Silver also had a substantial increase in value today, closing up about 15 cents, approximately 0.8% at $17.34. We entered our trade at $16.32. Our stops were below $16.41. Market is currently at $17.34. So we have just about a full dollar on this trade based on the contract size of $5,000 is a $5,000 profit per contract in silver. Obviously, maintain your current long positions in both gold and silver, as well as your stops. Traders, as I've spoken about on many occasions, the best thing we can do as market technicians is to attempt to place ourselves in a position so if the market moves in our anticipated direction, we can take advantage of it because we already have trades on. And that's exactly what I believe our primary goal here at the Gold Forecast has been. We began to enter this market when gold was trading at $12.25. That was what, roughly $10 off of the recent low at $12.15. The market has gained substantially. We've been able to pull profits on our first leg of the trade as we got out of the June contracts and into the August to buy us some more time. We have maintained a long silver position, which is also in tremendous profits. And the key to the profits in all of those positions is that we were properly positioned before any kind of move happened. We don't know what the future will bring, but we do know that if we act accordingly to a strong game plan of a decent risk-reward ratio, when we're incorrect, we can come out with a designated drawdown. And when we are correct and the market actually does move and go into a sustained rally, as I believe we are witnessing now, we are positioned properly and able to take advantage of the move. This has been Gary Wagner wishing you, as always, good trading. Have a great 3-day weekend. We'll talk to you on Tuesday for another daily update and review. Bye-bye.